All right, welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy is the best way for you to grow your wealth. I'm your host, Brett Swarts. In each episode, I'm joined by some of the best financial advisors, passive income wealth advisors in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. I also like to bring on actually live clients, friends now that I serve and have the honor to be a part of their wealth building and part of their families to help them create and preserve more wealth. And it is my pleasure to have Steve Prince join us today. And Steve and I go back about 10 years, and I first met him here in Sacramento, California, and when he's buying multifamily properties and buying opportunities. And so over the years, we've developed a relationship, and then I sold his property, which we're going to talk about right now, and he used the Deferred Sales Trust. So Steve, hey, welcome to the show.
Thank you. Thanks for having me.
Excellent. And would you give our listeners a little bit about your background and your current focus?
Sure. So background, I grew up in multifamily real estate. My parents are professional landlords. They're in their 80s now, but as long as I can remember, when I was yay big, out trying to help my dad, fix toilets and garbage disposals and stomp on trash and things of that nature in their multifamily environment. And just kind of grew up with it and got into it, the real estate game in terms of being an investor. Pretty early. My dad was pretty savvy in terms of, how to do structure some deals. And so I was able to actually get into real estate with my sister in a couple deals as young as I think 18 years old. Um, and be able to, do interest-only loans and things of that nature, borrow some money from, aunts and uncles and grandparents and things of that nature. But got into it pretty early, and then got into corporate America. I got into the cell phone business in 1993 when that was like a startup before there were startups. I just got super focused in that and kind of lost I don't say my way, but kind of lost my focus on real estate for many years as I was climbing the ladder and having, great success in the cell phone business. And then probably about 12 or so, 15 years ago, probably more like 15 years ago, started getting back into investing in real estate, multifamily, single family. I've bought some properties from banks. I've got 5 houses that are right next to each other, all kind of stacked up. I kind of consider that almost a multifamily, even though they're single family homes, because they're all right there. But it's been really nice to get that appreciation and have them all right there from a maintenance perspective. And then really, kind of the focus is just continue to be multifamily to try to get the economies, the scale, and things of that nature. And then, as I think you alluded to just a minute ago, trying to move up from a building that I owned and had a little problem in doing so. So that's kind of where we are.
Excellent. And then also too, the desire to invest along the way, not only in your own deals, but also with operators and syndicators. And I know we
It's true.
did a couple deals together, and we were able to with another operator where I threw funds in, you threw funds in, and it was
Yep.
success. And so you've also had a chance to be not only an active investor, but also a little bit passive as
Yeah.
well.
Yeah, it's funny you say that because it's so passive that sometimes I forget to mention it, right? So, in 4 different syndicated deals. So, in addition to what I'm active with in terms of properties, but you're right, and that's been and we'll talk about it here probably in a minute, but that's been a new focus for me, right? How do I take some of this energy and get it, getting relatively small returns at least initially, and can I take that energy and use it for something else while I give money to a trusted advisor to go put me into a syndicated deal, which we've done, as I mentioned, 4 times. So yeah, it's part of my new focus as well.
Exactly, because we all only have so much time and energy for our family, friends, and our professions, and so if you can find equal or greater returns and either half of the energy or none of the energy, as long as it's a trusted operator syndicator with a track record, hey, it could be a win-win on both sides. So let's dive in right into your deferred sales trust closed deal story. And maybe you can explain sort of the particular problem or challenge that you were having before you discovered the deferred sales trust, or just take us to that deal that you were selling.
Yeah.
And what were some of the challenges you were having with that, and why sell, and things of that nature?
Yeah, so myself and a partner owned a 7-unit building in downtown Sacramento, midtown Sacramento. And we'd owned it for about 10 years. And it was getting to the point, it's going extraordinarily well. But, when you take a look at the amount of cash flow you were able to bring in each year, it was very, very incremental versus, the opportunity to try to move up. And by move up, I mean sell that property, 1031 into something larger, in which, Brett, you helped me identify a 21-unit building in outside of Sacramento that we could probably 1031 into and move up and take a look at cash flow that would move up probably after 3 or 4 years of sweat equity, probably get to about almost 3x the cash flow. So the idea was move up, continue to move up, take this the cost seg in terms of depreciation, move up in terms of the cash flow, and keep moving, right? So that was the goal. What transpired was we found the building. We decided to sell. We found the 21-unit building. We were in contract there. We decided to go ahead. It looked good, so we decided to put the 7-unit building in downtown on the market. Found a 1031 buyer, right? And that's part of the issue with the 1031. Found a 1031 buyer that had, I believe, 2 to 3 days left to identify a property. We put an extremely large number on the building, the 7-unit building in downtown, and we were able to get that price because this was a buyer in distress. In terms of the 1031, right? He didn't want to have to pay his 40 or so percent to Uncle Sam. So we were able
Right.
to do
Let's
that.
touch on that real fast
Sure,
too. So
sure.
with part of that was timing, right? So this is in we're now recording this in COVID-19, late April.
Right.
But this was just about November
November.
of 2019. So
Yep.
what arguably might be, and I think probably will be the peak, right? Just around that area of the
Right.
peak of the market. And the idea was to sell high and buy low, and hopefully find that exchange buy, or at least sell high and buy at a fair deal that made sense, right?
Yep.
And fortunately, and just to give context, so Sacramento has been one of the biggest booming markets especially past 3 years, as far as multifamily and year-over-year rent growth. In fact, for 2 years, it led the nation in year-over-year rent growth in the double digits. And so we're coming off just a bull market for rental growth. And so we were able to achieve a purchase price of about $270,000 per unit. And so Steve's looking at a substantial capital gains tax liability above and beyond what he had bought it for, because he bought it back in probably the lowest part of the market, which was right around, I believe, 2009, if I don't, am I mistaken, Steve?
Yep. That's right.
It was when you purchased it, which was at the kind of the bottom of the market. So he
Was.
kind of basically had bought low and was ready to sell high. But now we're looking at the next property, which what was the frustration about that next property, Steve? Those 21 units that you were looking at.
Yeah. So there were a couple things, right? So it was an off-market deal, but we were able to kind of come in, you know, put an offer in and lock it up, get the property into contract, and we started doing some of our investigations. Found a substantial amount of water damage in, I believe, half of these, let's call it 10 at least, of the patios. They had patio homes. Um, and the seller was not really crazy about giving us credits, right? As Brett said, kind of a boom market, and kind of the attitude of the seller was, hey, if you don't want it, don't take it, right? I'm not interested in crediting you. In addition, I think there was a little bit of a misunderstanding in terms of, the seller, I believe, said that all of the units were completely remodeled. Found out that they weren't completely remodeled once we got a chance to get in and take a look. So as we started looking at things in terms of water damage and repair, in terms of getting the seller to perhaps put some dollars in to bring them up to where I thought they were, the rents we could get based on the units being fully remodeled, there was a shortfall, right? And as you take a look and you start looking at the shortfall, probably in year one, as we were going to phase out the remodels, maybe 2 to 3 a year, maybe 4 a year tops. We were looking at about 2.75 to 3% return initially based on that. So that was a real challenge for me in terms of the sweat equity we're going to have to put into it. The mix of tenants was not ideal. We knew we were going to have to get some turnover in terms of some of those tenants to get a higher rent, get a higher quality of tenant, things of that nature. That was going to take a lot of work. The good side of it was I could see a spot where in 3 years or so, 4 years, as I mentioned, we'd be looking at a really nice cash flow, but it was going to take a lot of work.
Yeah, a lot of work, a lot of energy, and then you have to look at not only the equity that you're putting into it, the big success you've had with the 7 units, but also that hesitation or that challenge of, well, I don't want to get caught with all this debt, because a part of the 1031 exchange, you have to take on equal or greater value for what you sold for, or equal or greater debt. And so the idea, ideally, is to trade 7 for 14 or 7 for 21, but often that means taking on all this debt. And so although debt was an all-time low, rents were also pretty highly appreciated. We also found that they could move the rents. Like there was probably another $100, maybe $150, at least at the time, what we projected based upon the rents in the area. But now, fast forward, obviously COVID-19 hits. And so take us to the moment, Steve, when you realized that the Deferred Sales Trust was actually going to help you solve your problem.
Yeah. So one of the challenges we didn't get to is I had a partner in the deal, and the partner had a death in the family, and because of that, needed his capital to go a different way. In terms of buying some other property and some other family issues he had to take care of. So in doing that, I was short on capital. I was already a little bit nervous about the cash flow of the building, right? At least in the early years. As I mentioned, it was going to be a struggle. I think there was a really good point out in the future, but it was definitely going to be a grind. So we got to the point where I said, okay, my building is in escrow. I've got a willing buyer, and has had acted in nothing but good faith, and we were pretty far down the path. So I really couldn't pull that deal, right, and say, hey, this building's no longer for sale. I think we were well beyond that piece. So my options were to go find another building with my portion of the proceeds, and go, perhaps struggle to find something, overpay for something. As we keep saying, the market was extraordinarily high, probably the highest point, probably the top, right? Now that we're here in COVID-19 times. So yeah, I didn't want to do that. And we had always known about, obviously with Brett being my agent, we'd always talked about the Deferred Sales Trust as being an opportunity. It's not something that was at the top of my list, to be completely honest. I wanted to keep moving up, right? That's kind of what I'd learned from my parents. My parents have done a ton of deals where they have, 5 properties that are sitting behind each other just from moving up, and have been extremely successful. And that's what I knew. And so, when I was faced with this issue, I said, okay, Brett, maybe we should start talking about this and start understanding what the opportunity looks like, to go this way, because I'd rather sell high, and perhaps if this thing works, I can put my money on the sidelines and then buy low when the market hopefully readjusts at some point.
Absolutely. So, take us to that moment, because I know some folks who are listening for the first time, they're exactly in your same shoes. They've done 1031 exchanges, they're family, they've been it for years. It's what they know. So walk us through when it actually shifted to, okay, or more so, what did you need to become comfortable with, Steve, to say, okay, this could actually work for me. This can actually solve my challenges. What did it take to get your hands around it and then finally commit to doing it?
Yeah, I can tell you it wasn't easy, right? As I've told you, Brett, several times, it's, I'll always bet on myself, right? And I'm going to bet on myself first, every time. I know I can take a building and I can fix it. I can raise the rents. I can grind away and get it to work within reason. Obviously, you have to buy it right. There is a floor to what you can do in terms of that. I had to get comfortable with, these individuals that would come in, the Campbell Law Group, Robert Binkley, and, yourself to a degree, right? I mean, we had known each other 10, 12 years, something along those lines, but, kind of in a different sense, right? From a realtor to now, being part of this trust. So I had to really dig in and say, okay, I'm going to take, hundreds and hundreds of thousands of dollars and trust somebody else. I have to somehow pivot and be able to say, okay, I'm going to trust somebody else instead of myself, right? And I'm very, what's the word I'm looking for? I'm very skeptical, right? I'm a very skeptical person. I'm going to dig and I'm going to dig. And my wife's even more skeptical than I am, right? So if I say, hey, look at this, she's going to say, poke holes in 4 or 5 different other things, right, about it. But it took some time, and we had to move relatively quickly. I think we started figuring out that this wasn't going to work probably mid-November, end of November. The property was closing
On the
December.
21 units.
Yes, yes. And then also then on the 7 units, right? That deal was going to close, and I had to figure out where to put the money, right, in a matter of 20 days. So a lot of time on the phone, a lot of digging, a lot of Googling, trying to see, what I could find out about Campbell Law and Robert Binkley, and a lot of time on the phone with them, trying to find out what this was all about. So it wasn't an easy shift for me at all.
Absolutely. And that's common with all of our clients, right? It's a sense taking, what you've always known and the sense of, hey, I've got control to
Right.
releasing that and putting faith and trust in this group with this new concept that maybe your CP hadn't told you about, right? That perhaps, you've never heard another commercial real estate broker tell you about,
Right.
and it's shifting from everything you know. And it is certainly a challenge. It was even a challenge for me too. I remember sitting at Marcus and Millichap, hearing about this for the first time about 10 years ago, about when I met you, Steve, for the first time, and saying, this seems like it's too good to be true.
Yeah.
So we understand why you would be nervous. We understand why you'd be skeptical, and we understand why it is a challenge to make this shift. So, but now that we've made the shift, tell us what life looks like now, and walk us through essentially the wave of emotions. Right, you sell at the peak, right? And then you're sitting in an investment portfolio, right? And you can also maybe talk about a little bit, your thoughts on stocks, bonds, mutual funds, and your experience
Sure.
with that. And then all of a sudden, everything crashes. Walk us through that whole, emotional roller coaster that it's been really the past, 4 weeks.
Yeah. So, to go back, the initial was I was really disappointed, right? My deal fell through, even though I had the DST as a backstop. It felt like a backstop. It felt like, okay, it didn't work, but here's my second best choice. It's better than paying the tax man, right? At least that was my initial feeling. Um, and really disappointed I couldn't get those 21 units because I was just going to keep moving up, right? Um, as we continued to dig into it and really kind of understand what the opportunity looked like, this light started kind of shining and kind of going, you know what? Maybe this is okay. Maybe this is going to be okay. Maybe there's an opportunity here, to potentially have these dollars on the sideline, and I can go and find more syndicated deals, right? As I said, I'm in 4 of them today. Maybe there's an opportunity to continue to do that instead of getting the 3% return and spending. I've got a day job already. where I'm a vice president in a small software firm. I already spend 40, 50 hours a week at that job. And then on top of it, right, trying to do this kind of nights and weekends and piecing that together. Um, Maybe I don't have to do that, right? Maybe I don't have to grind like I would have with the 21 unit building, and I can take those dollars and maybe putting them into a syndication, making that 3%, like I said up front, right? Make 6%, 7%, preferred return to start, and having that work for me. And as we started kind of, going through it, started looking at some of the opportunities. So Robert Binkley put us in a couple things. I think actually 4 investments. The majority of our money went into a mutual fund called Swan. And I won't get into a ton of detail because I'm obviously not the expert, but what was really attractive to me was, as Robert explained it, right? Swan is there and it hedges the market. So if something happens, actually Swan starts to, one, it'll hedge and you won't fall too far, but when the market recovers, you kind of slingshot up and you actually find, more returns. So that was really interesting to me because I've got plenty of money in 401ks and stocks and things of that nature. This was my real estate money, and I didn't want to take the real estate money and put it back into the stock market, right? I want to keep some sort of balance. So that was good. I felt like that was something that was interesting. And then we picked, I think 3 other stocks. One was like a bond fund, a 5G company, and then I think one other item, right? But I think maybe upwards of 60 to 70% of my money went into the Swan investment, and that was attractive to me, right? Because to have that backstop. But I wasn't really sure, right? They say, well, this thing kind of, it's here and it's going to work and it's fantastic. Trust me, right? And again, who do you trust? Do you have the trust? And do you trust yourself versus, other people? And I kind of on and on. Um, it wasn't really until this, COVID-19 induced recession that I could really see the value of the Swan, uh, um, investment. So, kind of fast forward here now, and the market's starting to get back. It's April 25th today as we talk about this. But in the last week, I think the market's gone up just about every day. But, and I haven't checked the Swan in maybe a week or week and a half. So at some point, though, it was only down about 5%, where, some of my other investments, whether it's my 401k, some of the other stocks we invested in are down substantially, right? 30+%. So it worked. And that was really kind of an aha moment, right? I was like, okay, I'm not sure if this thing's actually going to work until we actually see a downturn. I didn't think we were going to see a downturn as we were putting our money in January. Things were looking great, right? All of the, I think the central bank came out and said, we don't foresee a recession this year, and we're going to, up our opinion of what's going to happen in the market. And, blue sky, birds were singing, and then, here comes a pandemic. And, and in hindsight, thank goodness that the 21 unit building didn't work out because, as I mentioned, the tenant mix, I think, would have been challenging to have people pay their rent. We would have been in a spot where we needed capital to, fix things. And I think it would have been a whole lot of stress, right? As I said to you, Brett, the other day, right? I do a lot of my I do a lot of my own, kind of forecasting and numbers and underwriting on buildings. I didn't underwrite for a pandemic. I don't think anybody does, right? And it just happened. And I'm grateful that it worked out that I ended up in the DST.
Yeah, and I so appreciate you sharing that. And there's so much clarity in the way you've articulated the changes, right? And in particular, what sticks out to me, I think for you, if I'm in your shoes, is you're not in a bunch of debt, right? Because indeed, you're going to have to trade a 21 units from 7, take on all this debt. 2, the unit mix was going to be a little bit lower income. It's going to be a little bit more challenging than the downtown midtown unit mix.
Yep.
3, it's 21 units, right? It's that kind of that size of units where it's hard to hire a full-time property manager to justify the not having 50 or 100 units, the scale, if you will. But at the same time, it's a lot more work for you, so there's just a number of things that go into it. Of course, everyone's particular circumstance is a little bit different, but what I love about what the Deferred Sales Trust can do for you, and maybe you can articulate this, is what we now have the opportunity to do. Since you're out of debt, how does it feel to be out of debt? How does it feel to be diversified, liquid, and on the sidelines? Give us what is Steve, what would you like to do moving forward?
Yeah. So, this dumb luck to a degree, right? Sold really high, the very peak of the market, to a buyer who was under the gun with a 1031, as I'm sure, many of the listeners are either in that position or, have had somebody buy something from them in that position. Really lucky there. So, all my capital, for the most part, right? As I mentioned, the Swan was, upwards of 70%. So I'm down a little bit on some of those other stocks, but I think those will come back. And I think the Swan, as I understand it and as I've seen it function so far, is going to slingshot back up in terms of what it's able to do in terms of recovery. But now we're in an interesting situation, and I think it really depends on who you speak with. As I continue to look for syndicated deals, I've spoken with a couple of them and kind of what their crystal ball says. Are there going to be opportunities here, 3, 6, 9, 12 months? Perhaps, other folks are saying, well, gee, it might get even more competitive. We'll see. But I've maximized my building. I've got cash on the sidelines. And, from everything I see, the market's going down, and I think there's going to be opportunities to either, diversify with syndicated deals, diversify into, other buildings with other partners, or, find my own thing. I'm really interested, the syndication pieces are really interesting because now I can diversify into buildings. I don't put all my eggs in one basket. I can go into different markets. I was talking to a gentleman yesterday who has a program out in North Carolina or around the Carolinas, and some folks in Texas. Another guy in Mississippi I spoke to yesterday. It's just it's interesting to be able to. You feel like you've got the control now, right? I've got the cash, I've got the control. I can sit back and watch. And if I need more time to find the right deal, it looks like the Swan piece it really does function as Robert said it does, and I think we'll see that. And I'm hopeful, right? I think everyone also has a different opinion of COVID-19 and what the new normal is going to be, right? And I'm hopeful that we're back to where we were, hopefully by 3, 6, 9 months, and yeah, and those stocks are going to come back.
Absolutely. And that's so well said. And I think so too, right? And especially with California prices of real estate so high. I mean, $270,000 per unit, right? And if you can take that capital, defer all that tax, which you have done, and then diversify it, it could be into mobile home parks, senior housing, multifamily, whatever, right? Whatever real estate you want to go into with up to 80% of the funds. Not only that is you don't have to take the debt in your name, right? These sponsors, it's non-recourse debt for you. You could lose your investment, but the debt's not in your name. You're not having to deal with the toilets, the trash, the liability. And a lot of these deals are somewhere 8 to 12, sometimes 15% cash on your money, right? And
accelerated
so
depreciation
too. 3%.
Yeah.
Right. And then you also get the accelerated depreciation on top of that because they are leveraging these deals. And that's another video you could watch on basically the way to maximize the depreciation using a deferred sales trust, because one of the concepts is essentially you get a brand new depreciation schedule. So if Steve had done a 1031 into those 21 units, his depreciation schedule would have traveled, which is not good, meaning he doesn't have as much. But now that it's in the trust and he's no longer in a 1031, if and when he puts it into real estate deals, guess what? It's a brand new depreciation schedule, which also helps the syndicator because a lot of syndications don't allow 1031 money because it's too complicated. But with the DST, it's seamless because it's just a brand new LLC. The funds are sent to the LLC, all tax deferred and invested. So there's so many layers here, but that is the part of this, right? It's not just the structure or the idea, Steve, and correct me if I'm wrong. It's the team that we've built, and that surrounds you and helps you to all of us work together to make this, execute this business plan.
Yep, absolutely. Mastermind group, right? We've got the attorneys, we've got Robert, we've got yourself. You've connected me to other, other realtors out there, other, syndicators. There's all kinds of opportunity out there, but it's the team that kind of makes it all happen.
Exactly, and that's our favorite part. So, you ready for the lightning round, Steve? And then we'll finish up with the last question.
Sure. Hit me.
All right. So, favorite book, that maybe you've recommended and or given away in the past year.
So funny you say that. It's right here, and I've got all my little sticky notes. Think and Grow Rich by Napoleon Hill. Great book. Deep
What do you like
book.
best about it?
I when I got into it, and I'm sure many of the folks watching this have actually read it because it was written in the 30s, 1930 something. And as you look out on Amazon, I think there's gosh, I don't know, 20,000 reviews on it, and it's very it's been read by quite a few folks. But just the depth of it, I was expecting it to be another book about how to make money, but it's so much about opening your mind and having your subconscious help guide you. It was just so much deeper and so much better than I thought it would be. And the books like The Miracle Morning and those that are out there seem to have borrowed heavily from this book. Um, and it was really interesting to read about. It's just kind of opened my mind. In fact, I'm going to go reread it because I think I'm down to my last 10 pages or so, but there's just so much to absorb that I think I need to give it another run through.
It truly is one of the richest books and amazing books. And so you've inspired me to reread it. It's been a while. It's been a few years since I've reread it. So second question, Steve. So thanks for sharing that. Second question, knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you would tell yourself, either knowledge-wise or action step to take?
As I said, when I was 23, I got my first job out of college. I was actually an intern at UC Davis, and I got a job at Pactel Cellular that became AirTouch, that became Verizon Wireless, and I had a 13-year career there. As I mentioned, kind of doing that, I kind of lost my way in terms of the investment piece. Right, I was busy climbing the corporate ladder. It was like I said, it was a startup before there were startups. We were hitting 400% of our business plan every year as everyone got these car phones. And I wish I would have kind of just stayed the course in terms of staying locked in, staying in the market, understanding what's going on, buying more things and just kind of chipping away at things. Right, I think probably would have been in a different place from a financial standpoint. I mean, I haven't done bad, but when you take back and you take a look at it and shoulda, coulda, woulda, right? Taking a look back, that's probably one thing I would have done is just continue the habit of investing, calling, staying connected to folks, and staying in real estate more.
Excellent. Maybe your number one leadership quote that you like to live by or inspires you?
And you might stump the band on that one. I'm not sure. I'm not sure that I have one per se. I like to read, and it's kind of like if you asked me what my favorite song or my favorite movie was, I probably couldn't come up with it either.
Maybe it's a theme. Maybe there's a leadership theme or something that you try to, your family or a value that you live by. You're like, yeah, this is really, it helps us to stay on track.
Yeah. I think the gratitude is an incredibly important one, and not getting caught up in everything. I try to ground myself with gratitude. We're so lucky, and I look at who my parents are, and I was born in the United States, and there's so many other people that have it so much worse than we do. When you kind of step back and look, and even when you're having a really bad day, we have it pretty well. All right, we're very well off, and I try to keep that in the forefront of everything I do. Keep the gratitude there, so it helps guide me a little bit through the day, especially in the rough times, and when you're feeling like you're on top of the world, just it helps ground you a little bit.
Couldn't say it better than myself. What are you curious about right now, Steve?
What am I curious about? Um, I've been spending a lot of time thinking about what's my next move with the DST, right? So if you look at the DST as kind of a life cycle wheel, right, if you will, I'm here, right? I haven't taken those funds and reinvested them. So I'm really kind of interested in what this market's going to bring here in the next 3 to 9 months, maybe longer. But I'm really interested to see what's happening. So I've been doing a lot more research and a lot more trying to figure out when to make the move, understand the market, kind of all of those pieces. I think everybody is. I don't know that anybody has the answer, but that's what I'm curious about right now.
Love that. So am I. I think that's on just about everyone's mind as far as whoever's in commercial real estate, investment real estate, how this really does shake out. And of course, the national scene is so big, and every market is very specialized and specific. So
Right.
that will be super interesting. Well, Steve, I want to thank you for coming on the show. I want to thank you for sharing your wisdom, your inspiration, your deal story here, and really just your story. It's really inspiring. It's an honor to be a part of your team and be able to serve you and your family. And so, for those who want to get in touch with you, Steve, what might be the best way for them to find you?
You can shoot me an email, steve.prince28 at gmail.com is probably the best way to get a hold of me.
Perfect. Well, Steve, thanks for being on the show. And I want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy just may be the best way for you to grow your wealth. With that, we appreciate you listening to the show. If we could help you save a failed 1031, help you sever a partnership, or just help you have a backup plan in case your deal fails and you want to sit on the sidelines, feel free to reach out to us at capitalgainstaxsolutions.com. Thanks again for listening, and we hope to be in touch with and have you listen to the next one. Thanks so much.